Incredible. Welcome, everybody. Titan Show, together with another great Titan project, Ipor Labs, the credit hub of DeFi. I will immediately pass on the mic to Apollo to kickstart this space. But before I do, make sure to retweet, make sure to tell all your family members that two Titans share a space again. Let's get started.
Thank you for the lovely introduction. That song never gets old on me, or does it? I also like that you always tell people to invite their family members. I think that's how mass adoption is really going to happen by people inviting inviting their family members. Anyhow, I'm really excited to have Ipor Labs on stage today. This week we have a little DeFi week. Yesterday we talked to Swap Finance. Today we talked to Ipor Labs, and yeah, I think for everybody in the community, also welcome to all the people from Ipor Labs that are joining us. Shout out to everybody that is joining from the Token Titans. We're going to do a little deep dive on what Ipor is, how Darren came up with it, and the journey of creating it and sailing it through the winds of crypto, if you want to use a ChatGPT analogy. I'm going to start with a short introduction of Darren. Then I'm going to hand over the mic to you, and we get started with Ipor. Beautiful. Short introduction for Darren. I got this from LinkedIn. Darren has been involved with crypto and blockchain since 2011, advising, building, and investing in multiple projects. Right now, he's the CEO of Ipor Labs. He's also the co-founder of Full Farm, the first AI venture builder in Europe. Previously, he served as an advisor for the Cardano blockchain and headed BizDev for one of the first global crypto exchanges. On the institutional investor side, he served as an advisor to Emurgo, the venture arm of Cardano, and as an angel investor in blockchain startups. Originally from the US, he spends most of his time in emerging markets in Asia and Latin America. Darren, welcome on stage.
Thanks for having me, Apollo. I really like the music, so you guys, if your music's too good, it's kind of a shame to start the show because everyone wants to keep listening in.
We right now we have a little split 50-50 of people that despise the music and people that absolutely love it. So I'm happy to have you on the good side, Darren.
I'm tilting on the like side then.
Beautiful, Darren. We always jump right in with three simple questions just to set the stage so everybody's on the same frame with Ipor. First question: describe your product in one sentence.
Oh my goodness. Ipor is the credit hub of DeFi. There we go. That's a,
Beautiful. And what's the problem that you solve with Ipor?
the problem is credit markets are inefficient, they're immature in DeFi. So you need something that's like sophisticated tools for institutional actors. And these are things that exist in traditional finance, like risk-free rates, like interest rate derivatives. And these help people manage risk in the fixed income and the credit markets, and they're absent in DeFi. So that's really the reason that Ipor exists.
Beautiful. Maybe you already answered that, but third and last question, what's in it for the user?
What's in it for the user is right now people are really interested in taking flash loans, which is a loan for up to one block to maybe make a successful trade or to exploit a loophole or an arbitrage opportunity. But that's really innovative, but not really useful if we want to get to the point where we can actually borrow money from an on-chain bank to buy a house on a 30-year mortgage. So the question that we're trying to answer, the infrastructure that we're trying to build, is how we can build out this credit market so that one day you can actually do that. Take a home loan, take a 30-year loan from a DeFi bank.
Beautiful. Thank you so much. Thank you so much, Darren. I want to start a bit with your own background and your own journey. And as I hope I got the introduction right, by the way,
Yeah.
but you've been in the space for quite a while. Would you like to talk us through how did you, I mean, 2011 is it's quite some time ago. I can imagine that you were a bit of an outsider in your family circles when you told people that that you're working for a crypto exchange. How did you end up in the space? And from then until you now leading Ipor, how was your journey?
Yeah, I'll go probably. I'll try to go quick. I'm originally from the U.S. I was living in Chile after the U.S. financial crisis. I just managed to make it down there. Had some friends who lived down there, and I met the right or wrong group of people at a barbecue that were starting up a Bitcoin exchange. And I asked what was Bitcoin, and they said it's peer-to-peer crypto anarchy, like BitTorrent for money. And I said I didn't understand a word of that. But now, let's say 12 years later, I come back to that analogy, and that's, maybe it's one of the best explanations of what Bitcoin is. And yeah, so that was in 2011. That was around June. It was the first time when Bitcoin went from $3 to $32 and round trip to two and a half. So I led BD for TradeHill. We were the number two exchange to MTGOX back in the day. It was much smaller space. I think we all did a celebration when Bitcoin total market cap reached over $10 million. Like we made it. So it was a different kind of world. Getting a bank account now as a crypto company is still impossible, nearly impossible. You can imagine back then, we predated all VC capital, and we predated Coinbase. So when I look at the Coinbase's success, all power to them. It's a little bit of kind of an opportunity cost and a little bit of sore spot personally. But to see that the ecosystem grow to where it is now is quite amazing. Fast forward a little bit, in between the exchange, I did some risk recruiting and then got my feet wet in financial risk management. Helped set up the Premia chapter, which it does the financial risk managers certification. There's also GARP, which does there's the FRM, PRM, and these are two certifications for risk managers. Then we did a brokerage out of Chile, Pan Latam brokerage. We were the largest brokerage in Latin America at that time, operating in Peru, Chile, Argentina, Mexico. And then we started to do some a little kind of out of the box things that are still not fully tackled. We were looking at doing on-chain auditing. How can you use zero knowledge proofs to prove, for example, the assets and liabilities of a Bitcoin exchange? This was something that was spurred by the collapse of MTGOX because they obviously had a large hole in their balance sheet. We had suspected it because we worked very closely with them, back in 2011, 2012. And this was probably a really too early for its time. And now you see that people are still talking about, how do you prove exchange assets and liabilities on chain? We were looking at setting up a fund. There were some personal issues that happened with my co-founder that had to go back to the US. So we shut down those operations, and I started up a B2B payments on blockchain. So essentially, buy, send, sell Bitcoin as a way to do international payments. That took me from Chile to China. I ran that for 2 years. Payments is a very difficult business, very low margin, high risk, high regulatory risk as well. And so that was 5 years into my crypto journey. And then I met Charles. I was introduced to him through a couple of contacts, and I ended up advising Cardano in some of their very early years, 2017, 2018. So I have a footprint on a top 10 blockchain and built some STO infrastructure in the meantime. That was that's a thesis that hasn't yet still played out. I think security tokens or tokenization of all assets is an inevitability. It's more the timeline. And I really got back into doing everything on chain in DeFi summer. And that's when I reached back out to my co-founder, not my now co-founder, Dimitar. Uh, did a little bit of playing around, got rug pulled a few times, was playing around and seeing like, okay, so what's here? What are these, what's going on? What are people doing? What is fundamental? What's kind of fluffy things that won't be around for a long time? And let's focus on fundamentals. And maybe I'll pause here.
Thank you so much, Darren. I have 100,000 questions buzzing in my head right now. But I think a good way to continue our conversation is you've seen all those things. I mean, it's all started in 2011 with a barbecue in Chile, which I think is a great way to start off a crypto or Web3 journey. But throughout your experience and your time and seeing all these things, what eventually inspired you to start Ipor, or what was maybe like the big problem that you identified and you said, hey, like we should team up and put some assets into this, meaning time and money to solve it.
Yeah, sure. I mean, it's a culmination of a lot of things, right? So obviously, I'm very big on decentralization. I'm very big on transparency. I'm very big on responsibility and actually using the blockchain as it's intended, which is to remove remove the need for trust. So that's part of it. And I mean, I think DeFi does a lot to actually help us use these financial primitives without, I mean, you can think of a DEX as a non-custodial exchange. It takes away this kind of locus of trust. If we look at the last cycle and FTX blow up and all the centralized lenders, it's the trust at the center that let's say the old guard, even in the VC side, financial regulator side, that are looking at. You have to know and trust these people. They look at us, they look like us, they think like us, and I trust them. And we saw where that got us. And then the really nice thing that I really pull out from really terrible things in the last crash was Celsius. No one knew what was going on, but you could see them paying off their on-chain Aave position, to get back their ETH collateral. So things like this transparency, this openness is something that we really embrace. So that's one of the reasons why DeFi, and then why Ipor or Ipor, depending on if you're coming from the Latin pronunciation. It takes a concept in traditional finance called the LIBOR, which was the benchmark rate for around, I think, $350 trillion worth of deals and debt structuring and derivatives. And it serves as, what is the cost of capital now? And so the idea of a benchmark is really important if you want to build out more complex products like interest rate derivatives. It's absolutely critical to build a yield curve structure, and it really underpins the global debt markets. So interest rate derivatives, then, as an instrument, which are based on, they're actually underwriting these benchmark rates. They're a $450 trillion market that underpins global debt. It's mostly invisible to the average user, but for example, if you've ever taken a fixed rate mortgage, there is, at least there should be an interest rate derivative that's backing that, so that can essentially freeze the rate for the bank that's offering this loan. So we were looking at DeFi, Dimitra and I were looking at, okay, so you can split pretty much down the middle. The TVL at this time is in end of 2020 between DEX and lending, right? So credit markets and assets. We know that in crypto, people love speculation. That at that time, the BitMEXs, the Binances, the FTXs of the world, with the perps, are really popular, but maybe not necessarily so useful, right? They're very popular as a speculation mechanism, maybe less so for hedging, because you have the kind of the uncertainty of your funding rates. They're also not long term, so you get this kind of lack of structure. But that's going to be like a red ocean opportunity in DeFi. Everyone's going to, at that time, DYDX was the leader. Everyone's going to want to, fork, copy, paste, and iterate on this model, so that speculation is all nice and well. It can have its purpose, but who's looking at the credit markets, right? So we were looking at the credit market side, which is the other half of the TVL. Credit markets in DeFi fuel the asset markets, so it's a net positive impact for everyone. So as dollars get tokenized, let's say someone sends a wire to Circle or to Tether, and that gets issued on chain. It can enter through the credit markets, it can enter through the DEXs, but it comes on chain liquidity. that gets borrowed, and people can use it for whatever. You know, a lot of people are using it for speculation, but you can use it for very different things. You know, if you're a crypto native, you can use it for liquidity, to cover operating costs while you're long the asset. And you know, this is extremely useful. It feeds the other side of the market, but you have these crazy days where you know the interest rate can start at 3 o'clock, at 3% in the morning, and it's 30% by night, right? So this kind of crazy volatility, it's not really useful. Uh, and it also doesn't give you any guarantee of, you know, your cost of capital or your rate of return. So the whole idea about Ipor is that we start bootstrapping this yield curve in DeFi 1 month at a time. So we can eventually work out to those like 30-year instruments, but we'll start with 1 month, we'll go 2 months, we'll go 3 months, and actually, consequentially, we're now at the 3 month mark on the interest rate swaps in Ipor. And we'll start to develop this term structure. Not we will, the term structure will develop because the market starts becoming more mature. Um, People start, hedging their interest rate exposure. You have more sophisticated actors coming on, and then you can start getting this kind of cost of credit and this yield curve in DeFi.
Beautiful. You know what I think is very interesting about DeFi is that you probably have like a huge part of the population that has absolutely no clue what it is and what they could use it for and what kind of impact it has. So my next question, if you're building a protocol like Ipor, I hope that that protocol is the right word to use it. Is there a way of for you to saying, hey, you know, we're trying to achieve product market fit, and we're trying, you know, this is the certain metric that we use to see that we're doing the right thing? Is that a strategy you follow, or what is a definition of success for you?
Yeah, so the definition of success, for me, is that people are using Ipor in DeFi and they don't even know it, right? The long-term goal is, you know, again, you go to this DeFi bank, you get a fixed rate loan. There's an Ipor index and there's an interest rate derivative that's keeping this fixed rate of borrow for you, and it's invisible to you. So that's the end goal, right? So if you look at the underlying mechanics, first, we started out with the V1 and we focused on index, 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 interest rate derivatives, interest rate derivatives. This is their function. This is how they work. And then we realized that, you know, we're not going to convert a lot of people or even educate a lot of people about what these financial primitives are. And to be honest, they don't really need to know. So what's more important is the output of the protocol. And that will be more interesting when we start getting these structured products built on chain. So where the Ipor derivatives are being taken as part of a, like a multi-call contract. So you can create more complex structures that, that achieve different results, right? The simplest form of that is either a fixed rate borrow or a fixed rate loan. But you also have kind of these vault strategies where you're capturing, kind of different basis trades between the Ethereum staking rate, the USDT or USDC or DAI borrowing rate, that could extend to different, up and coming stable coins that have different rate dynamics, something like Curve USD or something like that, or even these RWAs, right? So these RWAs is something that I think crypto Twitter has been huge about for the last year. And to be honest, I think maybe the hype is overdone because looking forward to the future, something that we've been talking about for the last year, but now is becoming more apparent for the rest of maybe DeFi, is that if we go back into this, like one, a Bitcoin ETF can be, like a rising tide for all assets, Bitcoin halvening, and rate cuts in the macro, then you have kind of this perfect environment for crypto to shine. There should be this back to kind of risk on taking and interest rate dynamic in DeFi, which is what we see. We're in a new rate regime since I think July 26th of this year in DeFi in the Ipor index. You can also verify that on Aave or Compound smart contracts. Um, then RWAs, as the rate cuts come in, those yields are going to go down, but now people aren't going to want to move out of DeFi to get a high treasury yield. They're actually going to hold those treasuries, use them as collateral, and try to go back and get this higher DeFi yield. So we see this kind of re-inversion of yields to maybe where it was, or maybe the let's say the right order of things, where you should be getting some additional additional basis points for assuming smart contract risk in DeFi, where this different rate environment creates new opportunities for people to earn.
Mm-hmm. How many people right now use Ipor?
Right now, I don't have the stats, but I think it's a couple hundred swappers and maybe 1,000 or so liquidity providers. We have a leaderboard on the site, which is just built on the on-chain transparency.
Yeah,
So
I checked the Dune today. There were quite some big swaps in December that I saw.
well, this is also on notional value, right? So the nice thing, and one of the things about interest rate derivatives is it offers high leverage, but it pays differently than a perp, right? So, in a perp, if you're, let's say if you're 100x
Maybe
levered,
maybe
right?
Darren, could you explain to the audience what a purpose?
Yeah, okay. So a perp is a perpetual future, right? So you have people coming in and they're speculating long or short on an instrument. You have this funding rate, which is a way to charge interest, and if it's heavily on one side or the other, one side of the trade is paying the other, right? So there's some cost to essentially borrow for leverage in a perpetual future. And this means that you're speculating on the price of an asset, either up or down. So depending on the leverage, you have different exposure. So for example, if you're, in simple terms, if you're 100x levered and the price moves 1% in either way, or in the wrong way, you can get liquidated, right? So that is, that this is more of the kind of the speculative thing, but in interest rate derivatives, it's a bit of a different dynamic. So you're not just betting on the price movement in time, like right now. You're actually hedging the payoffs, or the interest rate payments. So, for example, you're exchanging the interest rate payment that you would pay rather than the actual entire notional value. So that means if you are, if you want to hedge the, let's say like the payment obligations for $1 million loan, with $1,000 in collateral at 1,000x, you can actually hedge, the payoff obligations. And the way it pays off is if the rate goes up or down 1%, it doesn't mean that you're liquidated. It means that at this time, one side is paying the other, but if the rate reverts, the other side is paying. And at the end of the contract, you settle the difference, right? So if you choose a pay fixed position, this basically means that you are protecting yourself if the rate rises. If the rate rises and that average interest rate is above your fixed rate, then you're in profit. So, in case you're a borrower, this is probably the natural hedge, right? So your cost of borrowing goes up, but you win on the instrument. You can use the winnings from that instrument to pay off the extra debt cost, right? So that's the hedge. And vice versa on the on the lending side, you want to be receive fixed, which is essentially hedging against loss of future income.
Mm-hmm. And for you, if you, you have a couple hundred swappers and you have a total value locked. For you to, let's say, set goals or, like we talked previously, determine success, do you look more at the usage or how many people use it per day, per month, or total value locked?
Well, total value locked, it depends, right? So, we launched this very nice liquidity mining mechanism that was invented inside of Ipor Labs. It's called Power Tokens. It's a DeFi primitive for tokenomics, where you can take, for example, one token and you can delegate its power to various modules, right? One of them can be liquidity mining, that can be governance, it can be any number of modules. So we launched this mechanism, and we got to a TVL of 42 million. Now we're sitting at about 14, right? So what I would think by that is that we were able to retain about a third of the capital, which I think is quite interesting. It means that we have pretty sticky capital around that. But what's important is it's basically the utility, right? So as I mentioned, in the V1, we focused a lot on educating people about what interest rate benchmarks are all about, what interest rate derivative is, and it's actually a very small. It's not a very small subset. It's a subset of traditional finance that's absolutely massive, but very few people are interest rate experts, right? So what we think is that at the beginning of the protocol, which is we're still in the very kind of early stages, and especially it's probably right time coming into this like volatile interest rate dynamic inside of DeFi. 1 year ago, we were sitting at about 1 to 2% in the Ipor index, and now we're sitting about between 5 and 10 daily. So that's a new rate regime for sure. Um, there will be a number of people that are looking to use it for speculation. And actually, the instrument that's coming out very soon, I won't give you the exact date, but it's called the stake rate swap. So you'll be able to lever up to 500x on the Ethereum staking rate by Lido. And this, the data team is able to get down to a very, very extremely accurate prediction what the Lido rate will be, but also every epoch, so every 6.25 minutes or something like that. And you can actually day trade the Lido rate at high leverage. So we think that that may bring some speculators, but what is more interesting for is it's for hedgers, right? So if you're a stake pool operator, you might want to be tactically or structurally receive fixed, as the rate might drop as you have more people coming on the network. If you're thinking that there's going to be like a big series of NFT mints, you might be on the pay fix side because you think that there's going to be more gas usage and more execution layer rewards, something like this, right? So that's maybe a long explanation to say there will be probably more natural traders for the Ethereum staking rate because I think a lot of DeFi people are maybe ETH maxis and looking at they really want to get more or preserve their sweet Ethereum staking yield. But I think the metric of success will be when the Ipor swaps are really embedded into a lot of other protocols, a lot of other kind of yielding strategies, asset management strategies, different kind of like options vaults or, different kind of basis trades. The whole idea, that you can actually, borrow or sorry, lend now, or, borrow against your now cheap RWA and get this, asset management yield inside of DeFi and get this premium. If you really want to like do kind of the leveraged looping, you're going to want to hedge your rate to actually freeze your gains. So that for me will be the success metric when
Mm-hmm.
over half of the swaps are not individual traders, but they're actual smart contract to smart contract calls.
Okay, cool. So your growth is mostly driven through partnerships?
Uh, More integrations.
Okay.
I mean, partnerships are a bit strange in DeFi because you can integrate with another protocol without ever speaking with anyone, right? And so that's actually the goal of the Ipor protocol. On the index side, it's a public good, right? So it's this risk-free rate on chain that you can use to peg your deals to, right? So you can set a deal term based on the Ipor USDC rate, for example. You never have to talk to Ipor Labs. You just point to the smart contract, the Oracle smart contract. And so this is kind of the that's more important that this the utility of the index and the derivatives is integrated into more protocols.
So in terms of marketing, does Ipor really depend on anything, or are you just, maybe I'm using a wrong analogy here, but maybe if the whole lake is rising, then your boat is also moving up. Is that kind of the goal with like integrations or more people using DeFi?
Yeah, I
Or
would say
yeah.
so. I would say so. And Ipor runs parallel to a lot of things, right? It's not really competitive with too many other things, too many other protocols. Um, it's more an enabler for a lot of other different strategies.
Mhm.
So yeah.
And what's the business model behind it? Is it a sort of like a commission cut model or?
No, I mean the business model is everything is token related, right? So with the token, for example, there is a leveraged liquidity provision using the power Ipor dynamic. So this is, I think, the average liquidity provider across USDT, USDC, DAI, and staked ETH is getting around 30%, which means that they're taking some price risk on the Ipor token. They're locking it to boost their yield. And so those are ranging from, I think, about 3 to 6% of the asset on asset yield, plus the rest in liquidity mining rewards. And so that's some way that people can get further participation in the ecosystem. Half of the swap taking fee is going to the DAO treasury. And there's a number of things down the road. So, if you think that there's going to be maybe hundreds of, let's imagine a DeFi world where there's hundreds of trillions of dollars in deals or derivatives or debt instruments that are pegged to the on-chain IPOR. It's probably quite powerful to be holding governance say over, for example, what protocols get included or excluded from the IPOR indices. How to spin up a new asset index, how to spin up a new derivative. So there's a lot of things around here. So model is 100% DeFi related.
Got it. Got it. We had yesterday a really interesting conversation with Cyril from Swap Finance, and we talked about raising funds. And they raised mostly from VC simply for the reason because they said, hey, what we're building is going to take 2 years of development, of a lot of research, deep research. And if you raise, for example, with a token raise or NFT raise, it's nearly impossible to get investors that have that long of a time horizon with their investment. For Ipor, I also see that you're backed by quite some big institution. What was your decision there, or your initial also, how much money did you raise, or the time horizon where you said, hey, this is how long it's going to take us to get Ipor to something that is usable by people in DeFi?
Yeah, so I mean, we did do a round where you raised about 5.5 million from some of the top VCs in the industry. It was led by Arrington Capital. We also had a new form, which is a very up and coming, VC on the crypto asset side. Space Whale, Gumi Cryptos, CMT Digital, um, GSR, a number of other ones. And we really selected them by, they're more like a couple of different criterias. One, they do on-chain asset management, which means that they can participate, either as a trader or a liquidity provider on the platform. Two, activity and governance, especially so, if you have access or, from a portfolio perspective, of multiple like credit markets or stable coins, things that can actually have indices spun up for them. But yeah, I mean, the goal was to basically build a strong base, be able to build a team to build out the protocol. And then, at some point, this protocol needs to become self-sufficient, right? So the whole goal in DeFi is that, everything is kind of building this perpetual motion where, at some point, Ipor Labs will submit an invoice to the DAO that can be chosen to be paid or not by the Ipor DAO holders token. And this is something that, if someone can do it better, they come in, they put a budget together, and they can also provide services, or Ipor Labs can be fired from the own protocol, right? And this is something that we take very seriously, and it's actually inside of all the contracts that Ipor Labs, which is, it's a centralized entity, it's a software builder. With all of the different people that we have, there's a clause in the contract that says the non-compete is completely voided in case that they go work directly for the DAO. So, if Ipor Labs team members, they want to go work directly for the DAO and they want to proposition the DAO for their own budget, that's fine. It's part of it's like written into our legal contracts between the legal entity and the individuals. So, I mean, this is our long-term goal is we really embrace this idea of decentralization, and I and someday if people aren't happy with the services that Ipor Labs provides, that you can fire us and get someone better. And my
You can do it yourself.
and yes, and my job as a software builder that wants to be able to be in this position is to try to be the best, and hopefully we can, but this is the idea.
Yeah, yeah, it's competitive. It's competitive. We're a bit over time already, but I have a couple more questions, and then maybe Amir and Tugan also have one. If you look at Ipor right now, what are for yourself the biggest, like we call it, Tugan and I in the book that we wrote, we call it the MMS, the magical missing shit, like the thing that would the domino that needs to flip that would unlock a lot of growth. Maybe that's for you just DeFi growing in general. But if you look at Ipor right now, what is for you the most important thing to get moving?
I think the most important thing is that we have users that take risk management seriously, right? Interest rate derivatives or stake rate swaps, they're useless unless you have someone who takes risk management very seriously. So, when you have more sophisticated actors, that the hedging instruments are the ones that are being used. And so, unfortunately, in the last, I think through this last bear market, a lot of the natural potential users of Ipor died or were severely hamstrung by the collapse of, a lot of the asset values, a lot of the centralized players. And so, to do this, the DeFi ecosystem needs, sophisticated actors, serious risk managers.
Yeah, beautiful. For Ipor in general, small call to action that you can leave here. What is a couple of things that people can really look forward to in the next maybe 1 to 3 months? What are you working on? And maybe even for our community, how can they be part of it? Or what is some value that they could add to you? What is something that you're happy about? For example, we have a lot of key opinion leaders in our audience that love to talk about DeFi. What's up? What's next for Ipor and how can people be part of it?
Okay, I'll give a very, very quick kind of view of what's up with Ipor and then, more how to get involved. So what's up? Very soon, stake rate swaps where you can trade, day trade or hedge long, this Ethereum staking rate. So this is quite beautiful because this is the de facto risk-free rate in DeFi on the base asset. So if you really care about those ETH yields, then you can protect yourself with these stake rate swaps. So that's coming. We'll have new pools coming, so new places to potentially earn and yield. And that's really the focus of the V2 marketing side is, it's been the best place to earn on your stables for the past year now, almost year and a half, in Ethereum and almost all of DeFi. So new pools, new assets, new instruments, and then the kind of the structured product workflow that we have inside it. You can check in the Ipor docs. So Ipor is much more than Ipor Labs, and this is really cool. This is one of the things that, like personally, I'm most proud of is how the Ipor community is growing. I think we have around 18,000 in our Discord. We have, so Ipor Labs is 18 people right now. We have 3 PhDs. We have a very strong quant team, very strong development team, biz dev. We kind of focus on very well-rounded team, but there's a lot more people. So right now, I think we have there are 10 Iporians, which are community kind of leaders, and these grew up in the Discord. So the best place to get active is inside the Ipor Discord. Ipor Discord, you can chat with the community members. These Iporians are actually getting an Iporian basic income, which is essentially a stipend being paid by the Ipor DAO and the Ipor DAO Treasury wallet for serving the protocol. So these people work for the protocol, and there is now in open governance, something around the IBI or the Iporian Basic Income, which is a kind of a new phase of that experiment. That said, there's also the whole DAO governance happens inside of Discord. So there's even a kind of explainer course how you can go through, about the governance. To get access to the governance, you have to go through, the process and pass a quiz. And the inside of the Discord, there are, the discussions about, DAO operations. And yeah, I mean the Twitter, the Medium blog. If you go on ipor.io, you can also see there's, I think it's called research. I think Ipor is one of the only places that have, or only DeFi protocols that has an entire quant library. I think 6 papers so far published, and one more is coming, which is the AMM v2. So there's a ton of information out there. Maybe it's a lot to digest. So inside of the Ipor DAO Discord, you can actually get funneled into different smaller channels talking about liquidity provision or governance, or like the quant models. So that's definitely the best place.
Thank you so much, Darren. We rounded off with 5 questions. 5 questions again. Are you ready?
Yeah, I'm ready.
What's your favorite blockchain?
Bitcoin.
What's one book that you've gifted the most as a present?
Oh, that's horrible. I don't gift books. I'm a
You
bad
can also
friend.
say what's a book that you really enjoyed reading in the last year?
I don't read books. I read articles.
White papers?
White papers, yes. Maybe my most frequent reading is Arthur Hayes' blog, Crypto
Beautiful. That's a
Hayes.
good one. And also good to inspired for Japanese breakfast. For
Yes.
you, Darren, I can imagine you work a lot. How do you balance life and work?
Don't. That's the easy answer. I try as much as possible. My goal with Ipor Labs is to be able to, by creating a great team, is have it be mostly self-sustaining, self-operational, so I can sit back and focus on the big, like the big picture and directional decisions. So that's the best way you can get balance, is by getting the right people. And Ipor Labs team is, sorry for the crass words, fucking incredible.
Beautiful. What's a Web3 CEO that you admire?
Web3. I really like Eric Voorhees. I know he's not a Web3 CEO anymore, but Eric has long been one of my favorite people in crypto. He's very outspoken. He's very consistent. I don't agree with everything that he says, but he is very. I, I like him.
Good. Thank you. And maybe one thing for the younger people in the audience, what is one thing that you wish you had known when you were 20?
Oh man, that's way too much.
Buy
Maybe
more
my
Bitcoin, maybe for you.
maybe well, no. So like buy more Bitcoin. It's always a different, like it depends on the different situations. I think the biggest thing that I learned in my 20s that I would have liked to know earlier is life isn't zero sum, right? For someone to win, it doesn't mean that someone else has to lose. And I think that's a really important thing, that in my 20s, it would have really helped me to have a different way of viewing the world, building, becoming an entrepreneur, building in crypto. You can see this, like the whole like rising tide lifts all ships. So life is not sum zero,
Thank you
because
so
life is not
much.
zero sum.
Cooperation over competition, right?
Yes.
Thank you so much, Darren, for coming on. DeFi Week, Ipor Labs. Thank you so much also for all Token Titans, and you call it Iporians. I love that name, for tuning in. Give everybody in here a follow. Give a follow to Darren and to Ipor, and follow them around. And maybe there's a way for you to get involved and make things easy to understand as a key opinion leader. I would love to see that. Also, Vlad, I see in the audience, the CMO or the marketing lead. Thanks for tuning in. That's it from my side. Amir, closing words, and play the outro song.
Thanks a lot, Darren, for coming up. Little technical issue. Thanks, Darren, a lot for coming up. Thanks, Token Titans, for being here. Tomorrow, back with another space, with another Titan on stage. Follow Ipor Labs, follow Darren, follow the Token Titans. Make sure to be on top of everything that happens. For our key opinion leaders in the space, there's always ways to add value.